Welcome to Just Minding My Business Radio, where we are moving at the speed of God, learning what we didn't know we didn't know. I'm your host, Ida Crawford, so grab a pen and paper and get ready for information that you can use. Welcome to another episode of Just Minding My Business. I hope you had an amazing day. Today I have coming to the mic Charese Adesalu, who has over 20 years of accounting experience and is the CEO of Prodigy Accounting Services, which is a subsidiary of Financial Literacy Incorporated. Financial Literacy Incorporated promotes financial education and counseling that creates financial freedom for its clients. Prodigy Accounting Services has partnered with private equity managers and credit counselors that have over 60 years of combined financial and accounting experience, which provides Prodigy Accounting Services with valuable resources and tools to support its clients with the best strategies available to create financial freedom. Well, welcome, Charese. I am so glad that you're here. I want to hear all about what we can expect this year in terms of the taxes.
Right. Thank you for having me. And we have a lot to share with you for 2017. And I know some people are curious about 2018, but we'll get to that soon.
All right. So for those of you who haven't done your taxes yet, listen up, because Charese is going to bring us some valuable tips that we all can use.
Definitely. Well, starting, because I always like to start off saying that this year income tax returns are due by April 17th. So the Internal Revenue Service, they've given you just an extra 2 days, and the reason for that is because usually you have up until April 15th to file your federal income taxes, but since that date falls on a Sunday, they've been so gracious and they've given us another 2 days, like for us to file our income tax return. Now, stating that, let's say that you still need some time. You're not holding on, or you're not wishing and praying things to get better. You're just waiting for some more documentation or information from your employer or from someone else, and you can't file it by April 17th. You can always file an extension, but your extension tells IRS that you have up until October 15th, 2018 to file your tax return. Now, with that extension, that just gives you an extension to file, not an extension to pay if you owe taxes. Because if you file the extension form, which is a Form 1040-ES, and you put on there that to your knowledge, you're not going to owe any federal taxes, and you put down 000. However, you file your tax return and you submit them on October 15, 2018, and you owe $1 up to $15,000 or more, they're going to accrue interest and penalties from April 17th through October 18th. Through October 15th on your tax return, because they were going by the information you had on the 1040-ES stating that you have no tax liability. But since you've filed your tax return and you owe taxes, you'll be assessed a penalty and a fee from the actual filing date all the way through the extension date. So just keep note of that when you file your extension if needed. Okay?
Well, that's definitely good to know.
Yeah. So let's get down to the nitty-gritty of just some of the changes that's been made, like in 2017 for the tax season. Honestly, there hasn't been too many changes being done, but the big changes, as we know, that's gone through Congress and through the House of Reps and was approved by Trump administration. Those changes, they will take in effect on your 2018 tax return. So the changes that were just signed and put into law those will be reflected on your 2018 tax return, which is a savior and which is good, because we still have the same policies and the same credits and the same laws that we had last year that we have now. Like for example, when you file your tax return, you can get an exemption amount, which is not a refund amount, but the exemption amount decreases any tax liability you might owe. So stating that every person that's listed on your tax return, that includes the taxpayer, that includes their spouse, and also any dependents on that tax return, you'll get a personal and dependent exemption of $4,050. That's the same amount that it was when you filed your 2016 tax return. So with that right there doesn't change. Now, when you file your tax return, you can either use your standard deduction, or you can itemize some of your expenses on your tax return. In 2017, because the standard amount for your deduction, if you're single, is $6,350, because it's increased about $500 for each filing status. Head of household is $9,350, and married filing jointly is $12,700. Now, the difference between standard and itemized, people don't realize standard, that's just a given amount that you'll put on your taxes, and that's included in the calculation of whether you get a tax refund or whether you owe taxes. But when you itemize, because you're able to claim your mortgage interest, your property taxes, at times also your sales and use taxes that you've paid, and let me clarify, general sales and use taxes, which is defined as sales and use taxes that you pay in your daily living. And people don't know that. For example, when you go to Walmart or go to CVS or go to JCPenney's and you pay sales and use taxes, you can claim that on your tax return, but you have to have all of your receipts for the year, and you have to calculate and add up all the sales and use taxes that you paid throughout the year, like to each retail store or to each entity or corporation. Also, when you itemize, now in 2016, you were able to take 7.5% of your gross income, because of that amount. Let's say, for example, that you made $10,000 last year, and 7.5% of that $10,000 is $750. If your medical expenses exceed $750, you're able to claim on your tax return the excess amount over $750. And medical expenses, that includes your co-pays, that includes your health care, pharmacy, and also vision and dental premiums that's taken out of your paycheck every 2 weeks or every week or every month, based on your pay time or your pay schedule. That also includes medical mileage. Also, sometimes, your doctor might give you a prescription, to get certain services. You can also claim that on your tax return. So anything that's related to any type of medical or health living expenses, you can claim that on your tax return, just as long as it's in excess of the 7.5% of your gross income. Also, you can write off on your tax return your property taxes that you pay for a big ticket item. When I say big ticket item, because I mean, purchasing a car, purchasing a RV, motorcycle, a trailer, big ticket items, because usually when you got items like that, you have to pay sales and use taxes, and you have to pay title fees and registration fees. You can write those fees off on your taxes also when you use the itemized deduction form, which is a Schedule A. Also, you can also list on there your job expenses. And when it says job expenses, you can't not write off you traveling from your home to your main job. That's not a expense you can write off. However, if you have 2 jobs or you have a part-time job, and you have to travel from your full-time job to your part-time job or travel from your full-time job to another related job site, you can write off that mileage on your tax returns just as long as you do not get reimbursed for those expenses through your current employer. If you don't get reimbursed for those expenses throughout the year, you can claim those expenses on your Schedule A form, on your 1040 tax return. Also, you can also claim on their tax preparation fees on there, and also you can claim, like, for example, other job expenses might be you purchasing certain attire for your job, like, you're a construction worker, and you have to purchase certain boots or like a certain warm suit just to keep you warm during those cold days working outside, or certain attire. You can write that off on your tax return. Also, any type of fees that you have to pay for, like, for example, let's say that you're in a medical field, or you're in a certain type of organization, and you have to subscribe to different magazines or publications, or have to be a member, again, of a certain organization just because of your job qualifications or the type of job that you have. You can write off those expenses on your tax return just as long as you don't get reimbursed for those expenses to your employer. Also, you can write off. Oh, I'm sorry, because I'm just going on. I'm going on.
That's okay. Just one more question about the used and sale tax.
Okay.
You said that if we save the receipts, like if we go to Walmart, or is that we can claim those. Now
you can claim those. Mm-hmm.
Okay. Now, what does it have to be? Does it have to be? Because Walmart sells a lot of stuff. It's like you might go in there and buy clothes, you might buy household stuff. So when you say that, what items are considered something that you can use on your taxes?
Mm-hmm. Right, exactly. There is no designated item because on the Schedule A, which I'm going to pull up, there's a place that says sales and use taxes. And the thing is that when you look in the publication for the Schedule A, it's general sales and use taxes. So saying that it's any sales and use taxes that you pay towards any store or towards any vendor. But you just have to have your receipts and calculate it. Now, saying that, like in order for you to use the itemized deduction amount compared to the standard amount, is that your itemized deduction amount has to be more than your standard deduction amount. So saying that, for example, let's say that you file head of household in 2017 taxes, because the amount for a standard deduction is $9,350. If your itemized deductions exceed $9,350, that includes your sales and use taxes, medical expenses, job expenses, tax prep fees, mortgage interest, property taxes. If that entire total on that Schedule A exceeds the $9,350, you can use the itemized amount for your tax return. So, like, getting back to your question, there's no certain item that you have to purchase. You just have to add up all of the sales and use taxes, general, that's the key word, general sales and use taxes that you paid throughout the year. You just have to add, for example, all of those up and put that dollar amount on your itemized deduction form, which is a Schedule A. That's all it is. But you have to be extremely organized, and, documentation and backup is the key to everything. As long as you have all your documentation and you have it organized, you can use any general sales and use tax amount that you paid for the year for clothes, for certain foods, like, snack items, for anything, a pair of shoes, a notebook, Apple computer, anything. You can just tally up that tax amount on your tax return. Now, this is a little tidbit. In 2018, that's going to be gone. So so if you're organized and you have all your receipts and stuff together, this is a nice little tidbit and key you can use this year, because if your itemized deduction amount exceeds your standard deduction amount. Did I answer your question?
Okay, because I got a ton of receipts.
Okay.
I just keep them in a bag. Everything I buy, I put all my receipts in a bag. No matter what it is, I keep them.
Okay, well, that's a good thing. That's a good thing, but it's just, you just got to get, find that time just to go ahead and just add up everything. But that's a good thing, because I know, for example, like a lot of my clients who are entrepreneurs, because they have a lot of receipts, because, usually they spend their money for their business, whether it's getting something to eat or, treating the client to dinner or maybe going to a certain event. So they're known to have like a bag of receipts. But, having a bag of receipts is like having money at times, because there's certain things you can write off that you have on your receipts, either for like a business expense or for general sales and use taxes on your Schedule A for your personal tax return. Yeah.
Okay.
Let's see. I'm sorry. Go ahead.
I wanted to know about that, because I keep a ton of receipts all the time. And I wanted to be clear about that.
Okay. That's all you have to do. You just have to add them up. Spend the time just to add them up and just tally up that amount and see how much it is. But if you have any questions, because you know my number, you can always call me. We can go through some stuff line by line just to make sure that you understand the concept and you understand exactly what you're filing on your tax return.
Okay. Now, while we have this little piece here, can you give everybody your contact information in case they want to contact you about what they've just heard?
Sure. My our website is www.fli-inc.com, and again, my name is Charese Adesalu, and our contact number is 443-752-8886. And also, you can send me an email personally at C-A-D as in David, E-S as in Sam, A-L-U at FLI-INC.com. Or you can just send an email to our general mailbox, which is Prodigy, PRODIGY as in Tom 1, just the number 1, at yahoo.com. Okay,
right.
That's a lot of information, but again, making sure you can reach me. Yeah. So like another thing, Ada, because if you don't mind me talking about, because I want to talk about the earned income tax credit.
Okay.
Because I know, that's a lot of, that's a big item for like a lot of low to moderate income taxpayers. And the thing is that with the earned income tax credit, that's a quote unquote refundable tax credit, which means that you get that amount in cash in your refund. That's actual money that you actually get in your refund. So stating that, because I know like in the past, you didn't have to have income because to get the earned income tax credit. Because I know in the past, because I've known people that didn't work, but they had qualifying children. And, because they had 1 or 2 kids or more, they were able to get this tax credit in a dollar amount. But in 2017, because they said that you have to have earned income of at least $1. So you have to earn at least $1 just to get the earned income tax credit for the first thing. And the second thing is that you can get it with a qualified child or children, or, for example, without a qualified child. But with the earned income tax credit, if you do not have a qualified child, then let me see, I'm trying to pull up like the minimum amount of money Okay, because the minimum amount of money you can have as income on your tax return just to qualify for the earned income tax credit without any children, I'm sorry, not the minimum, but the maximum amount. You can have either being single or being head of household or being a qualified widow, which are the filing statuses for your tax return, because the maximum amount you can have in income without having any qualifying children is $15,010. So it's $15,010 is the maximum of income you can make just to get the earned income credit without having children. Now, the maximum income you can make with two children, with like two or more kids, is $45,007. So whether you're filing single, whether you're filing head of household, or whether you're filing qualified widow, you can't make more than $45,007, which is kind of odd. To with two kids or more, you can have 4, 5, 6, 7, 8, 9, 10 children, but you only get a certain amount for 2 kids or more, and the maximum amount of income you can make is $45,007. Okay. Now, saying that, let's say that you're married filing jointly. You know, because you're married, you and your husband, and y'all file a joint tax return without any children, because the maximum amount of money you can make is $20,600. If you have 2 or more kids, the maximum amount of money you can make with 2 or more children is $50,597 if you're filing jointly. Now, another filing status I didn't even mention is married filing separately. If you file married filing separately, you do not qualify at all for the earned income credit, at all, not at all. So, you know, because I told some of my clients they don't want to file married filing jointly with their spouses because their spouse might have past tax debt or their spouse might have some issues they don't want to get involved in, which is fine. But also they have to realize that certain tax benefits, certain tax deductions and credits they won't qualify for when they file married filing separately. Okay? This is a last tidbit that I'll talk about about the earned income credit. So for example, like if you have one qualifying child, your maximum earned income tax credit, this is in cash money that you'll get on your tax return, is $3,400. Okay? If you have 2 or more qualifying children for the earned income tax credit and you meet those maximum income standards, so for 2 or more qualifying children, you can get up to $5,616 in cash for the earned income tax credit. So, you know, that's why, again, like a lot of, and sorry to jump, but the Internal Revenue Service, like when tax preparers do the earned income tax credit on their client's tax return, there is a due diligence form that has to be filled out because the IRS knows that this is cash money. And when it's cash money, sometimes people would lie, cheat, and steal for it. So they make sure that the child that they're claiming, that they're either their child or children or that they're a close relative, and because they verify that by asking you questions whether or not did you verify the kids' school records, just to make sure that the address that the school records has is the same address that you're filing on your tax return. You know, have you seen medical records, just to make sure that this child that they're claiming is their child or their qualified relative or dependent in some way.
Yeah, because I know back in the day, I knew a lot of people that was claiming other people's
That's
kids.
right. They were throwing the kids. They were throwing the kids around. One year they was with grandma. Next year they was with auntie. One year they was back with mama. So yeah, they was throwing them around.
Yes, yes. So now IRS got hip to that quickly.
They surely have. They surely have.
That has been a lot of information, Charese.
Yeah.
I'm probably going to sit down now that you've told me about this sales and use tax. I'm probably going to ask for not an extension till October the 15th, but I'm probably going to, because I need to get all of those together, and I'll probably do my taxes somewhere around April or so.
Okay.
To go through all those sales tax, because I know I got my taxes done last year with H&R Block, and I did all this medical stuff, and they didn't take it. Now, can you repeat again in terms of the medical stuff, how much you have to have?
Sure. Now I stated that that let me see. I'm reversed from because I stated back in 2016, because I talked about back in 2016 that you had to have medical expenses that exceeded 7.5%. So in 7.5% of your adjusted gross income. So for example, so on your 1040 tax return, because you'll calculate on the first page all of your income and certain things you can deduct from your income. And that last line on page 1 of your 1040 is your adjusted gross income amount. In 2016, if your medical expenses exceeded 7.5% of your adjusted gross income, you can claim that excess of the 7.5% and more. So, again, for example, if you made $10,000, 7.5% is $750. Let's say that your medical expenses came up to $725. You don't qualify for the medical expense because it's under $750. But if your medical expenses are $900, you can claim that $150 on your tax return because it exceeds the 7.5%. That's in 2016. In 2017, they've changed it, and they said that now it has to be more than 10% of your adjusted gross income. So if you make $10,000, 10% of $10,000 is $1,000. If your medical expenses is $999, you can't use that deduction because it's less than the 10%. However, if your expenses is $1,001, you can use that one for your medical expenses. But, people don't realize medical expenses includes a lot. It includes eyeglasses, it includes dental work, it includes co-pays, it includes your health insurance premiums you pay from your paycheck every 2 weeks. It includes a lot of stuff related to your health and well-being.
Okay.
Yeah, it includes all of that. Some people say, well, because I pay co-pays and I don't have my receipts. If you go to the same pharmacy, your pharmacist keeps a tally of, what you pay every time you go in there. You can go to your pharmacy and just ask for a billing list, of all the co-pays and medications that you've gotten throughout the year. And that's, supporting documentation for those medical expenses for your prescription.
Yeah, because that's what I did. I would go to the pharmacy at the end of the year and get them to pull a records. Because normally most people go to the same one, and I go to the same one all the time. So I'd wait to the end of the year and then just have them give me a printout of everything that I spent for that previous year. Right. I'm telling you, this is a lot of information, and we definitely can't cover everything that needs to be talked about in 30 minutes. However, if you have more questions, definitely reach out to Charese. You want to give them your information one more time?
Sure. Let me give it out again, and this time let me start off with my phone number. The contact number is 443-752-8886. and you can call that number and just ask a general question because usually our secretary, she'll answer the phone call, but just call up and just tell them who you are. You have some questions or concerns about either tax issues or about finances or about investing, and we'll be more than happy to answer your question and address any needs you might have. Also, you can visit the website at www.fli-inc.com. And, for example, on that website, we have a contact page. You can click on the contact link, and you can ask questions that way, too. So we have plenty of ways for you just to get in contact with us and just to, get the information that you need just to live a healthier and wealthier 2018.
All right. Well, I thank you so much, Charese, for stopping by.
Sure.
We're definitely going to have her back to talk to us about 2018, and I know everybody wants to get a good understanding of what that's going to look like and how to begin to prepare for that. So thank you so much, Charese. I look forward to chatting with you real soon.
Same here. Talk to you soon, and everyone take care.
This show is brought to you by the amazing women of A Sister Circle Empowerment Network, ASIN LLC, where we are never in competition, but always in collaboration. And our valuable sponsors, Prodigy Accounting Service, Next Generation Accounting to get you where you need to be. Contact them at prodigyaCCT1@yahoo.com or online at www.fli-inc.com. Prodigy Accounting Service, Next Generation Accounting to get you where you need to be. Contact them at prodigyaCCT1@yahoo.com or online at www.fli-inc.com. Ready to plan for your retirement? Contact Game Plan for Retirement. Call 410-902-0464 and schedule a free consultation. That's Game Plan for Retirement, 410-902-0464. Interested in becoming a sponsor for Just Minding My Business 24/7 radio? Or would you like to know what a Sister Circle Empowerment Network, ASIN LLC, is all about? Contact us today at asistercircle@gmail.com and visit our website at asistercircle.org. That's ASISTAS circle.org. Contact us today at asistercircle@gmail.com and visit our website at asistercircle.org. That's ASISTAS circle.org. Voiceovers for A Sister Circle Empowerment Network provided by Ruth Haskins, voiceover actor. To fulfill your professional voiceover needs or to receive her current professional demo, contact Ruth at 443-620-4115.
Thank you for tuning in to Just Minding My Business Radio. I'm your host, Ida Crawford. We hope you enjoyed the show and appreciate you stopping by. Many blessings to you and yours.